Get Rich Slow with John Wolf. Hey, today I'm just going to talk briefly about how long does a typical transaction take and when do I need the cash? When does the cash have to be ready to make that transaction happen? There's my license and info if you want to get a hold of me. All right, so the typical transaction in my area takes about 30 days total. That's from when you submit your offer to the seller to purchase the home, it gets accepted, and then we close. It's about 30 days. Now, how fast can it go? 8 days is the legal limit if you're going to be getting financing. And typical for me is about 21, 22 days. But most of the time, there's no reason to rush. I have funded a loan from start to finish in 9 days. It's not what I would call a serene or comfortable experience, but it can be done. Typical turn times for credit unions and banks are 30, 45 days, just so you guys have an idea. 30 days for me, even with the very difficult files I often do, is usually plenty, but complicated enough situations sometimes take a little bit more time. Anyways, when do you have to have the money ready? Well, first thing that people put money down during the transaction, it's just called earnest money, and it's agreed upon in the contract. Traditionally, it's 1% of the purchase price, but that's totally negotiable. I see transactions where they just put $300 down because that's what they have in fluid cash, and that's okay. It's not a good thing or a bad thing, but 1% is typical, and that's expected to be turned into title escrow within about a week of signing the initial purchase contract, and 1% is the normal number. Now, after that, the next thing that you're going to have to pay for as a buyer is the appraisal. Typical cost for that is about $750. There are some things that can change that, and it's sort of a market demand thing. So when things are going really slow, appraisals actually get cheaper. When things are going really fast, we have to pay the appraisers more. The other thing that almost every buyer is going to want to pay for is an inspection. Now, just so you understand, the appraisal is there to protect the bank as far as a monetary asset is concerned. The inspection is to protect you as the owner, so you know what, if anything, is wrong with the house and you're prepared to deal with it, or you're going to ask the seller to fix it or give you money for it or something like that. It's not going to be till we're almost ready to fund the transaction that you're going to need the rest of the money, if any. Now, you could be doing a zero down program and might not have to come up with anything. But if you're getting gift funds from a family, it's really great if those gift funds are into title a week before the transaction finalized. It's totally possible for the transaction to happen on time with the gift funds getting in like the day before, the full business day before, but that just makes things really hard on everybody, and it's way easier on everybody if those gift funds are there 7-8 days beforehand. If something goes wrong with the transaction, they'll get all of that money back. It's not something you can lose. Next is just going to be paying for the final closing costs and any down payment that the client, the borrower, still needs to put in. Now, that 1% earnest money counts to that. So if you're doing a 3% down purchase, you might only be bringing the other 2% down on the day of signing. Now, there's two ways for the buyer to bring their money to title. Two preferred ways, I should say. Now, you can either go to your personal bank credit union and get a cashier's check. And if you do that, you need to bring it to title at least a full business day beforehand. That means if you're closing on Friday, you really need to get that to title on Wednesday. A few days earlier is super. You can also wire it, and you can even wire it on the day of transaction. But again, cutting it close just makes everybody nervous. Love it when we can avoid that. So just to give you an idea, the whole timetable again, once you get in purchase contract, 30 days is normal. You're going to have the earnest money, maybe 1% of the purchase price by the end of week 1. And sometime in week 2, you're going to be shelling out about $1,200 for inspection and appraisal. Then week 3, hopefully we'll get gift funds in. And then the 4th week, as we're going into closing, is when you're going to have to, as the borrower, bring in your money. Now, one note I want to make, it's totally good, okay, to use the 401k or retirement savings to buy a house. Talk to your financial advisor about the repercussions of doing that, but it usually works out great. Sometimes it takes a while to get the money out of retirement accounts. The worst I've seen was 27 days from the request date. I thought personally when that happened that the client hadn't made the request right away, but I ended up seeing the entire trail of emails. Anyways, have an awesome day. Like, share, subscribe, put your questions down. And I'm a mortgage loan officer in Oregon and Washington. So if you want help on that account, hit me up. Have an awesome day.